Thank you, Kevin. So welcome to the last panel of the day. I think we're running a little bit behind schedule. So I'm going to skip this very insightful and very exciting opening piece that I had written, so you're all going to have to miss out on that. But I'm going to do a very quick round of introduction, although the panel needs little introduction, but I'm just going to do that and I'm going to jump right into it. So starting from my left, I have Michael Parker, Chairman, Global Logistics, Shipping and Offshore at Citi. Andy Dacy, MD and Group Head of Global Transportation Group at JP Morgan Asset Management. And they've switched the order around from my paper, but that's fine. Mads, who's now the CEO of Navigator Holdings. I've got Ilias, who's the Head of Shipping for Deutsche Bank. And then I have Elias, who's the CIO of Borealis Maritime. So just to set a little bit of context is obviously the title of the panel is the title of the day-to-day, efficient, versatile, adaptable. I think owners and most other industry participants are seeing a huge amount of variables that we're having to contend with as we go into the next sort of 12, 24 months. This is not new to shipping. We've all seen this before, but I do think that the magnitude of some of these variables is a little bit more than what we've seen in the past. So I'm just going to start, and probably with you, Michael, first. I think maybe a slightly difficult question to start with, but I'm going to try and narrow you down to pick maybe one variable, in your opinion, that you think could have the maximum impact on shipping in the near, maybe maximum medium term.
Thank you, Gaurav. I think if I could just say before I answer that question, I just wanted to thank Frederick for that presentation we've just heard, because what it emphasizes is that this is about slow and steady progress towards that net zero target using all the technologies available today. And that is what is important for the regulators, investors, shareholders, in fact society as a whole, is the visibility of the improvement in the environmental footprint. And that's what the Poseidon Principles is really about. It's about how people like banks make business decisions to help motivate our clients to make those decisions. But as you've heard, there is a lot there that is available, and I think we will be financing the retrofitting that will prove that. So I'm not going to answer the question by mentioning Ukraine or China, both of which are too big to, they're going to be there, and we know Ukraine could go in one of many directions, which could overshadow everything. The answer to the question, in my view, is really MEPC 80 in July. We have a global regulator, which the industry is fortunate to have, that has been very slow in terms of making the progress that the private sector has been pushing for. If MEPC 80 doesn't come up with the right decisions and the right ambition, really on 2030 is more important, frankly, than 2050, that enables everyone to know where regulation is going in the near term, the levy, we know there needs to be some sort of carbon tax, then I think that is going to trigger a lot of good and bad things. We know that CII and EXI, particularly CII, is not actually the right answer, but at least it's trying to do something. But that can't be changed till 2026. But a failure to come up with the ambition in July means a delay to 2028 for the IMO to revise its ambition, and that is far too late. I think if it doesn't, what you will see is the IMO being ignored by many, many countries, particularly in the context of green corridors, because green corridors, I think we're going to see a significant pickup in activity. If you look at the work that the Getting to Zero Coalition did back 2 years ago around what we need to be doing by 2030 in terms of the transition, we need to have 5% of all fuels in the maritime industry being zero emission. That 5% means that final investment decisions on production of that needs to take place by 2025 at the latest. We're now 2023, we've been talking for 4 years, it's now time for things to happen, and you can see some of the actions people like Maersk are taking. So we've run out of time to do the talking, we've now got to take action, and I think if the IMO doesn't lead on this, then the private sector will. And I think that will be unfortunate because it will undermine the role of the IMO. But in a way, what it will also do is sort of say that the enlightened countries in the green corridors that are likely to be the first to start will get on and do the things that need to be done. And I think that's very positive. So I'm sort of in two minds. I hope the IMO will make the right decision. But if they don't, it doesn't mean nothing will happen. I think a lot will still happen. But it will send a disappointing message to the outside world that there are still countries in the IMO that want to stop the progress. And everything you've heard today about what this industry needs to do, and frankly is being driven by the cargo owners just as much as anyone else, that's why it will happen. And the IMO will then really cease to have performed the function. And I'll finish by saying the European Union, which I was a little bit skeptical a few years ago about some of the initiatives they're taking. I think they're actually done a very good job with what they're doing. They're leading. The US is sort of catching up on this. They have said the IMO will be effectively ignored as the regulator in EU waters if they don't come up with the right ambitions. And that's unfortunately what would happen. So to me, the broad ripple effect of that across everything in the industry would be very significant. Thank you, Michael.
I might actually come back with the same question to the rest of the panel later if we have time. But moving to Andy. Andy, I'm curious to sort of understand, how are you navigating this current environment? All the macro factors, the external trends that are going on, and then you obviously are diversified across lots of sort of subsectors. How and where are you focusing your energies in this current environment?
Yeah, it's a good question. I listened to the other panels today, and I thought they were quite good, but they're all quite diverse. And on the one hand, you had some bullish views on, let's say, the container ship market and the dry cargo market. You also had some pessimistic views. I think the key thing in this business is basis and entry points. And as I look at the market today, I really feel like it's a bit murky, to be honest. Yes, you can make the argument that China comes back into the market in the second half of this year, and that propels a lot of dry cargo activity. But if you look at dry cargo prices, they're not necessarily cheap right now. We've come off of a couple of years of pretty strong performance, and so yeah, you can make the argument that there's a buying opportunity. But if you're trying to play this market and by buying at, let's say, historical averages or below historical averages, I'm going to get back to the average point in a second. This market's murky. Product tankers are super expensive. And I'm reminded of what was happening back in sort of 2002 and 2003. And one of the adages back then were that the seasoned ship owners that saw that market unfold and nobody really expected or could really predict what happened with China and the WTO back in that time frame, but it was a pretty heady ride for about 6 or 7 years. But the more, I would say, traditional owners at that point in time just couldn't get their gut feeling around the new pricing that was coming into the market. You had a significant uptick in costs in terms of new building costs, charter rates, and it all seemed very transitory. And there's been a lot of talk in the last panel about shipping investors are traders. I think a lot of ship owners are traders, and we're always expecting the market to break. So the things that I struggle with are we now confronted with a whole new dynamic in terms of basis cost? Are we seeing the uptick in commodity prices? Are we seeing an uptick in the cost of building ships, the dearth or the reduction in the number of shipyards that are available to construct ships? Does that put a squeeze on what it ultimately will cost to build a ship? And I take the example of a product tanker, an MR product tanker. Today, there was a resale the other week, a Chinese shipyard, I can't remember which one, product tanker sold for $46.5 million, a brand new product tanker. Now that to me is an excessively high price. I have a gut feeling for a product tanker of around $30 to $34 million, and that's been over the last 30 to 40 years kind of what the inflation adjusted price is. So if we're looking at this order of magnitude of increase in entry points, then you have to get your head around that. And there's been many instances in the past where people got their head around it and then it reverted to the mean. So, is this systemic? Is this structural? Are we in the more traditional historical shipping environment where it's cyclical and we'll see mean reversion again? So when I stay up at night and I wrestle with these issues, that's one of the biggest things that I see on the horizon for all of us to contend with, and that has an impact in terms of financing costs and frankly on charter rates, right? If you go and you buy a $45 million product tanker, yeah, you could probably make a lot of money the next couple of years, but if there's a mean reversion, then you're stuck with a very high priced asset. So that would be my answer.
Thank you, Andy. Good point around the asset prices, and maybe I'll come back to that later. Mads, we like the word transition, so talking about your transition as you went from ship owner to a sort of an R&D center, now you're back wearing a ship owner's hat. How do you see the world sort of changed in these last 18, 24 months that so you've been away, if I can call it that? I mean, a lot has changed at the interim, and when you come back, where do you see other sort of new priorities as an owner?
Well, I've been right there with shipping all the time, but what a change over the last 2 years. I mean, of course, we've seen very healthy returns for those investors that stayed faithful to shipping after many years of hardship, and that was, of course, great to see in many segments. But of course, for me, the big change has been the increased focus on sustainability and having a business as a ship owner that's sustainable. So when we look at the ESG, the E is of course a very, very big thing and has gotten a lot of focus, and for many, many good reasons, because the energy efficiency issue is getting much more attention and is much, much better understood today, the enormous potential that lies in operating your ships with better energy efficiency. And here, there's been a lot of healthy cynicism today about whether focus on the climate is sufficient for investors. But the good thing is that the business case works. And we've just talked about that with Frederick before. There is a very, very healthy business case for optimizing a ship owner's fleet on energy. There's also some very, very interesting growth opportunities, not least for a company like Navigator Gas that transports compressed and cooled gases, where both the blue ammonia, green ammonia, CO2 transportations, here we're seeing very, very significant markets emerging, and that's of course going to be a thriving and large business for shipping as we go forward. So that has of course also really crystallized, and we're starting to see the FIDs being taken out on these mega projects that will deliver those millions of tons of cargo to be transported. The S with diversity and also safety, of course, are as important as ever. And the G on governance, I think, is also getting increased interest from investors here. And just having your house in order, having your risk management in place is making it much more attractive for investors, for banks, for clients, for your employees to work in a shipping company. So I think it's a sea change, and it's very, very good to hear how that has changed.
Thank you. And I guess from a slightly different perspective, I guess, Elias, where do you see all of this factoring into your investment decision making in the last 12 months? Or maybe sort of, I guess, probably last 6 months, where we've seen a little bit more accelerated changes in some of the financial markets, and looking into the outlook for the next 12 months, how are you looking at your investment decision making?
Sure, thank you. Look, to cut to the end result, what we did over the last 18 to 24 months is obviously a major rotation in our portfolio. We basically sold out of container ships completely and went very, very long offshore. So that's the end result of what we did over the last 18 months. And that is also reflected not only in our equity strategies, but also in our debt strategies. So it's very, very similar. Now, the way that happened, obviously, is a combination of things. We, and I'm sure all of us from a different position, are forced from time to time to take a step back, and rather than looking at incremental relative value of this size versus that size, or this segment versus that segment, really take a step back and look at the whole world. And when we speak to our investors, it's what has really changed over the last couple of years is that for a decade, shipping was a laggard in terms of performance. If you were comparing it to any other real asset class, real estate, infrastructure, aviation, you name it, I mean, this was not good. And this has been reversed. The last couple of years has really, really reversed it. And this has to give everybody some pause. And whether you call it a high basis, as Andy said, which is exactly right, high prices, et cetera, so what we forced ourselves to do, obviously, that resulted in taking profits from an investment that, in absolute terms, had done really, really well for us. We also have different types of concerns for non-operating owners in container shipping over the next 5 years for other reasons. And then looking for intrinsic value. And I'm glad that, MSI sort of agreed with us. I would be interested to see what they thought 18 months ago about offshore. But that was sticking out as a sore thumb. We were very bullish energy. We saw a tremendous supply-demand imbalance in global oil and gas. There were a few different ways that we could express that view. One was tankers. We couldn't get ourselves to see the value there, and that was our mistake, obviously, with the benefit of hindsight. And the other one was offshore, and that's at least, obviously, so far has played. And just to link it a bit, whenever you express that view, you also have to be aware of everything else that's going on, and obviously the environmental changes. Offshore wind is a big theme. So what we try to focus is on assets which are larger, high-spec, dual-fuel, battery packs, et cetera, which could, in theory, be converted or be utilized in offshore wind as well. And so that's generally been the theme over the last couple of years.
Thank you, Elias. And Ilias, I guess a similar question to you. I'm going to borrow a word that Kevin coined earlier in the morning. The industry is moderately positive, but uncertainty still looms. And how are you sort of contending with it with a bank hat on?
Yeah, thank you for that. The thing we're trying not to, it's no secret that banks are finding it a bit more difficult to find deals to do, despite the market being positive. I think, there's a lot of cash flow in the system. What we try to do is be disciplined. As a bank, I think we need to play a role in being disciplined. What I mean by that is, I haven't seen an industry where anyone profits by engaging in a price war. So we don't think banks should be engaging in a price war with each other, fighting for transactions. We don't engage in loosening structures in a way that I don't think is conducive for anyone or good for anyone for a bank to be too loose in their structures that they offer their borrowers, because that basically, at the end of the day, may have a negative result. So at the core of what we do is try to be disciplined in our lending criteria, despite the fact that there is a lot of cash flows in the system. Also, something that Andy, highlighted before, kind of the entry point is very important for us. Is something we try to be very thoughtful about. And I think that's something that the industry generally need to always be thoughtful about. Having said that, I think there's other issues in the industry that were not really there a few years ago, such as the theme of deglobalization or slow globalization, whatever you call it. That was something that was very people talked a lot about last week in Davos, for example. We need to basically start taking into account some of the kind of new structural issues that are facing the industry when we're thinking about providing kind of leverage going forward. So I think the more thoughtful we are, I think the better for the wider industry.
Thank you. And going back to you, Elias, you mentioned offshore, and I just wanted to clarify, are we offshore wind, or is this offshore oil and gas?
Oil and gas.
And from an investor's perspective, you alluded to it a little bit in your answer, but just sort of, are you seeing investor appetite change because everybody's talking about ESG, or not really? How are you balancing that?
There's no doubt that everybody's talking about ESG, and there's no doubt that things are changing, and they're changing for the right reason. Now, to answer your question from an investor perspective, it depends on where you are, it depends on the continent, it depends on the type of investor. But generally speaking, and this is, okay, a tongue-in-cheek comment, but a lot of people, whatever the global institutional view would be, as long as their allocation to shipping-focused strategy is small enough, they stick it to Appendix 85 of their book, and they're fine.
Okay. And Andy, coming back to the point you made about asset prices, and I think a lot of owners we speak to, I think there is no disagreement where asset prices are today. But I'm also sort of just trying to figure out that the asset prices are where they are. There is a market for this. So where do you think the buying appetite is coming from that is actually holding up these asset prices? And are you seeing then sort of two different types of owners who are going to sort of buy that product tanker at 46 million and still be able to make it work? Where do you think is the thought process behind that?
I think it just depends on what kind of investor you are in the shipping industry. So if you're a spot market trader and you believe that there's a structural support in the product tanker space for the next couple of years, then you can probably get your head around buying something for 46 million, trading it, getting some very high rates, defeasing the entry point down to a more reasonable basis, and then sort of seeing what you have to deal with at the end of that time period. So, but you know, if you're a long-term, let's say, charterer, and you're buying at that rate, then maybe you can get a higher charter rate, and maybe for a longer period of time, but the slope of the curve of the sort of amortization of your investment may not be as steep as if you're in the spot market. So I think that's one issue. I think another issue is we're all sort of subject to the vicissitudes of the industry, and the positive vicissitudes of the last 2 years are that we've all generated a lot of cash. So we're sitting on a lot of money. I think, you know, like in any industry, we know what we know and we don't know what we don't know. And I use the example of MSC, and I've often thought, what would it be like to be sort of sitting there thinking about what to do with, you know, 50 or 60 billion or 70 billion, some said 100 billion in free cash flow. And you know, the immediate sort of asset manager in me would say, well, I'd want to diversify. And I think they are doing that. But at the same time, a lot of these big liner companies have gone off and ordered a lot of very large container ships, which may play out. We've talked about deglobalization. Potentially those could be at odds with one another. But the point there is that the industry can be its own worst enemy in the sense that I think the comment was made on the previous panel about many Greek ship owners looking to buy dry cargo vessels, and whether that's true or not, I don't know. But I think there's this effect of, what do I do with my money? And I need to invest it, and I know shipping, and you go through a whole rationalization process of getting comfortable with these new levels, and that's sort of the beginning of perhaps a bad decision making. So sometimes in this industry, I found it's best just to wait. I think Doug Mavernack in the previous panel was talking about how it's a cyclical business, and if you wait long enough, then you'll lose money, but you'll also make money too. So I think just be disciplined, you know, wrestle with these new basis levels. I just don't know the answer to that. I wrestle with them now, but maybe we've just emerged into them, and maybe wait 6 months, see how those bases readjust, see what the new geopolitical outlook is, and maybe things begin to drift down a little bit. So it always doesn't make sense to me to buy when things are super high.
Fair enough. It's a good question about what you would do with 50, 60, or $100 billion of cash. But staying with you, Andy, I think I'm going to ask the same question that I started off with Michael, and the theme about being sort of the variables and being adaptable. If you had to pick one which is top of mind for you amongst the many.
Yeah, a lot's been talked about here, and I'll try to make this brief. I mean, there's lots of concerns out there. I got to think the macroeconomic picture is the one that concerns me the most. I mean, that's a tide that will move things. And look, I think there's a bit of a shift right now. I think there's a shift away from North America and developed markets into emerging markets. So, you know, to the extent that we're all sort of somewhat subject to the dollar and the activities of the Federal Reserve, we haven't really seen, with the exception of geopolitical sort of impacts, an uptick in average charter rates that reflect the underlying interest costs. So if you're a believer in the fact that we may see a new step change in terms of where long-term interest rates settle, that's my biggest concern in terms of we need to see the charter rate market react to that. And I'm cautious until it does.
And Mads, where do you think?
No, I think if we look at the very short term, I think inflation is the big issue here. But we see some good signs. We see that the inflation seems to be fading off a little bit, and that's definitely a good sign. And we also see some more activity showing up in China, and I think overall that's good for shipping. But overall, we'll see lots of volatility, we'll see lots of geopolitical risk also in the year to come. And here it just comes back to good risk management. Those companies that have delevered and run a robust balance sheet and have good practices in place and have shown investors that they can handle making money and they can handle paying back to their investors and so on. I think those are the companies that are best positioned. So, but if you ask me if I'm positive on the market, absolutely. I think it looks much better than it did 1 or 2 months ago.
Okay. I guess that is, if you had to sort of summarize, Michael, maybe for you, bullish or bearish as we go into the next 12 months? We used to, cautiously optimistic was a popular word. We changed it a little bit to moderately positive. Where do you see it?
I mean, I think, cautiously optimistic is, if you're a shipping banker, you're always cautiously optimistic until, Chapter 11 gets close and all the rest of it. No, I think we're living in dramatic change, but when you live through that, you don't really see it. It'll be 5 to 10 years, and we'll look back and see how dramatically different this industry has become from what it was. The lack of, 10%, I was always taught the 10%, over 10% order book, that's when things get slightly dangerous. Hasn't gone over 10 yet. It went down to 9.9. It's sitting at 10 now, I think. The lack of new building is, I think, very, very important, because there's a lot of ships that can be scrapped and there are a lot of ships that can be retrofitted. And we talked earlier, the panel talked earlier about not building unnecessary new ships. And I think we'll see, what's going to be, there are lots of things now behind the industry that weren't there before. And I apologize if I missed it and it was in the previous one of the panels. Shipping is now being driven increasingly by cargo. And cargo, rather than ship owners, are going to be deciding what type of ship, who's going to run it, what fuel it will be. But that will take time for all of that to happen. There'll still be plenty of opportunity for Andy to invest in many more ships. So I think, as Mad said, I think deleveraging has been very, very important. And as you heard from the banks are not going to go and they will finance the new technologies, they will finance retrofitting. But I think capacity will be managed well. The scrutiny on the industry is only getting higher, whether it is the typical people looking at it, but also bank regulators are now looking closely at how banks look at climate risk. Shipping is going to be in the middle of all that. So the deployment of capital will not be fuel to the fire as it was before and just after the global financial crisis, when a lot of banks disappeared, losing billions of dollars. So I think one can be optimistic, but I think the cost of shipping is going to be higher. The consumer is willing to pay for that, and I think that's where self-discipline by owners is very, very important. And I think those that are disciplined and play for the long game, to Andy's point, they will be the winners, I think, if people rush in one direction or another. I think the other thing, as I've got the mic, the two other things I'll just say, one other thing I'll just say, apart from cargo really driving the agenda now, I think it's about the seafarer. And I think we'll see, because of what happened during COVID, a lot more scrutiny by, again, the cargo owners on how crews are treated, not just by ship owners, but the whole process. So I think we'll see much more lobbying in the United Nations and other bodies by the major cargo owners in the consumer business and the energy business around how shipping actually operates as a business. And I think that's very good, because then shipping will still be cheap to the consumer, but actually it will be a little bit more expensive than it has been. And when I came into shipping as a banker in the mid-80s, everyone was setting up offshore flags. It was all about cost, reducing the number of people on board a ship. I think we're going to go in a reverse direction, because people are willing to pay for it. In fact, society will demand that we pay for it. So that's the change that's underway.
And Michael, you made a comment about shipping bankers and cautiously optimistic. So I don't have to answer that since I'm the moderator, but I can put it to Ilias. Do you agree? Are you cautiously optimistic, moderately positive, or bullish? Bearish doesn't seem to be an option.
Yeah, I mean, in the medium term, I'm optimistic. I think the some of the factors we discussed on this panel, like the fundamentals, I think are positive. With lower order book, even the container shipping market has corporates that have very strong balance sheets. There's a lot of basically, positive things to look forward in the future. Having said that, we have to sail through some, challenges, and unfortunately, the list of challenges is kind of endless. Like from, U.S., China, strategic competition, protectionism, the energy transition, and so on. So that's why I was saying before that to go through and sail through all those problems, one needs quite a bit of discipline and smart decisions, over the next kind of couple of years, and then I think we'll be out. The recession will be over, and we will be able to enjoy kind of more normal markets, I think, in shipping as well. So yeah, cautiously positive.
That's a new one. Elias, Mads, any views, any differing views? It's fairly aligned.
I think it's always difficult to look at shipping as one whole because there are very big differences between the segments. There are some where the order books, thank you to the container industry and the LNG, for filling up the yards, so the rest of us can live in peace and quiet with no big new building order book. And that's, of course, great for a number of sectors, and that's where I would put my money if I had any.
Fair enough. Mads, I'm going to stay with you, and I'm going to sort of repeat that question. I'm curious to see, from your perspective, again, the one variable top of mind. Sorry, we already went to you with that. So I'm going to switch to Ilias. And one variable, I want to narrow it down to see what's top of mind. Ilias and Elias. Maybe in that order, please.
One variable for us, I think kind of, it's not a variable, but residual value, right? Like that's what we're focusing on these days because there's so much uncertainty. So, super focused on the asset more than before. It was always needs to be the asset, but at the end of the day now with the changes in the energy transition, residual value is the most important thing. So, that's the variable we kind of struggle with, I have to be honest, in some cases, but that's the one we focus on.
And Elias?
Yeah, I don't think I have much more to add. I think all the points that were raised are very valid. I think in one word, at the moment, I guess we are patient. We're not going to be making any big moves anyway over the next 6 months or so.
Yeah, and I think, sorry, okay, I'm going to check if there are any questions or no time.
Okay, we have another couple of minutes if there is a question. Yeah, John? Okay.
Thanks. The three words, efficient, versatile, and adaptable, I will stick to adaptability. How will the banks and the companies react and how adaptable you will be if we have a big case, far bigger than the Ukrainian situation now in East Med and in the Far East, South China Sea? How will you react?
I can. That's a big question. I guess the beauty of shipping is that it's fairly malleable, and at least I think from Posidonia this year, the title theme was disruption, disruption, disruption. We've seen, whether it's the pandemic, whether it's the war in Ukraine, that every time there's a disruption that seems to increase ton-mile demand, it seems to create all sorts of inefficiencies that ultimately help shipping. I guess one thing that I worry about, if there is a geopolitical conflict between, let's say, the West and China, broadly defined, does China at some point begin to sort of, because it's a big driver of revenue in this industry, does it say we're not going to use Western ships? And depends on what part of the West you're part of. You may be more Western than others, and so some that are less Western may be okay. But that in my mind would be the biggest concern if China made a unilateral decision to just draw the lines around its import fleet sort of orientation.
maybe I can just add that if you had told me that there was going to be a war between Ukraine and Russia and that would have a large impact on the trading patterns for ammonia, I wouldn't have known how to analyze that. But we definitely saw that there was suddenly no more ammonia flowing from Russia into Europe. The LNG prices were super high, so all production of ammonia in Europe stopped, and hence we would have to transport ammonia from as far as Australia into Europe. You know, that I don't think any of us could have foreseen. But if you have good risk management, if you have a robust balance sheet and you have well-trained seafarers on well-maintained ships, you know, you are able to look for those opportunities that show up and even in a bad situation be able to make business while it's ongoing.
Okay, is there a final question, please? No, then I think we're done. So Gaurav and panel, thank you very much indeed. Thank you. That's the end of the conference. Thank you very much for coming along. Thanks to our speakers, our sponsors. You're now welcome to join us at a cocktail reception outside and looking forward to seeing you again next year. Thank you.